after your lunch pause, and thank you for being with us for this session about On the Road to MiCA 2, what's next. As you know, we discussed before lunch with speakers from DBA, from ESMA, and from the Ministry of Finance in Estonia, the implementation of MiCA, what the industry needs to do, and we received many hints about the status, the timeline, and also which are the next steps. I'm very happy and honored to have in my panel Cristiana Bovidou, Policy Officer in the Digital Finance Unit in the DG FISMA of the European Commission, and Mr. Mattis Mäkker, Head of the Estonian Financial Intelligence Unit. This session aim is really welcome to this panel. This session aim is really to discuss what's next and MiCA 2 and what is the current work on the implementation of MiCA, and then what could MiCA 2 cover. So starting from the very beginning, Mrs. Bovidou, what can you share with us about the current work on the implementation of MiCA and how is this progressing? That would be my first question to you.
Yes, good morning, and thank you for giving me the opportunity to present the Commission's views on this very important and interesting topic. So, as you already know, MiCA has been published and entered into force at the end of last June. The provisions on stable coins, which is Titles 3 and 4 of the regulation, will start applying from June 2024. While the rest of the regulation, like the provisions on the crypto asset service providers and the general crypto assets, will apply as of the end of December 2024. So now we are currently into the implementation period. The bulk of the work is taking place with the European supervisory authorities. They are drafting the technical standards that will make up the extensive level 2 body of rules. Technical that the EBA will mostly cover the stable coins, which is the asset reference to the e-money tokens. These are due to be submitted 12 months from entry into force of MiCA, meaning mid-2024. Those rules that concern crypto asset service providers and the general crypto assets will be prepared by ESMA, and they need to be submitted 18 months following entry into application, which is the end of 2024. In addition to that body of work, the Commission is preparing a number of delegated acts that will also need to be in place in order to certain aspects of the regulation, notably the criteria on how to classify an issuer of arts or EMTs as significant. For the fines and the charging of supervisory fees by the EBA, as well as the intervention powers by ESMA, EBA, and the national competent authorities. Some crypto asset topics were left out of MiCA, of course, as you are aware: decentralized finance, NFTs, lending and borrowing assets. NFTs are out of scope if non-fungible, and fungibility will be determined by the national competent authorities on a case-by-case basis, with a recital of MiCA providing some helpful indicators as to what constitutes fungibility. But what was left out there was a good reason for it. Back in 2020, when MiCA was developed, these issues were not featuring so prominently, and not to the extent that any policy action was deemed necessary. We are, of course, monitoring and reflecting on their intervene for this as well.
Thank you very much. Thank you for these introductory remarks. Mr. Mäkker, from your position as head of the Estonian Financial Intelligence Unit, how is your view about the current work on the implementation of MiCA? Do you have any remarks on this for us?
Yes, thank you. First of all, thank you for the invitation. It's really, I'm really glad to be here. Colleagues, I think tsunami is coming. You heard from the EBA, from ESMA, You heard all the abbreviations that they were talking about: EBA, ESMA, ECB, AOPA. Everything is coming, and this is something that I don't know if you are waiting for it or no, but this is what we have. I remember when I joined, I was actually working in the Financial Supervisory Authority before I joined FIU. I remember when we were implementing the PSD, the Payment Services Directive, and the newcomers, they started coming to the market and they had no idea what is going to happen, what they are going to hit with. And this is the same thing, I think, what is coming with MiCA. And at sometimes I think that there is too much regulation since the beginning, that we are over-regulating and we are expecting all the market participants to play with the rules or the rules that they have in front. But at the end of the day, it will you need to invest so much into compliance that one way or another you need to raise the revenue that you are receiving from your customers. You need to increase the pay for the services, and this is going to hit hard not only to the service providers but to the market as well. One thing that I was listening throughout this morning, and one thing that we haven't been talking about, we have been talking about regulation, and this is essential, but we haven't been talking about trust. And I think trust is something that we are missing right now, and the newcomers really don't understand what they are facing with. You have a new supervisory authority that also supervises the banks. It has been there for decades now, and the newcomers, they need to fit in to this place. We were listening to the first panel speaking about the banks that they need to take this business. No, because they have the regulator that says that if you take this risky business, you need to invest your capital in it. So basically, it's a one ecosystem where we need to build the trust between the market participants, the CASPs, the supervisors, the banks. And if the trust is not there, I don't see how we would move forward. And the trust is not between one entity and the supervisory authority and one entity and the bank, but it's the whole system, it's all the CASPs. If your partner collapses, this is a risk for you as well. If your partner launders money, this is a risk for you as well. And you don't get the bank account because the banks are so afraid that it will happen with you as well. So the tsunami is not going for you only, but it will go for your neighbor as well. So I guess that we need to be there for everyone, the supervisors for the supervised entities, the supervised entities with other supervised entities, and we need to build this trust.
Thank you very much for saying this. If I may here, I understand what you mean by regulatory tsunami, but personally I am in favor of regulatory tsunami, meaning that I personally think that part of the trust is built by regulation. I always have believed that in my job, it's 24 years I work on European regulation, and having a clear regulatory base and a clear regulatory structure allows for the trust in the ecosystem. Because if the alternative is to have no MiCA and no regulation Europe-wide of CASPs, then the trust in the ecosystem as far as CASPs are concerned will never be there. So I agree with you, it's a lot in terms of compliance for the industry, but I also think it was really welcome and really needed to have a framework as MiCA in place for also legitimizing the crypto industry and allowing them to interact with traditional finance and integrate this ecosystem. So on this, I have to really praise the European Commission for putting together MiCA, as I praised the European Commission in 2004 to start putting together the Payment Service Directive number 1, which was the first piece of law covering payments from one end to the other. Without the framework, it's impossible to develop further and to create the trust. At least that's my humble opinion, being very partial in what I do, being someone working in Brussels for 24 years now. But that's only my opinion. But I understand what you mean by the regulatory tsunami and being ready for it, yes.
Can I add? I'm not saying that we shouldn't have the regulation, that we shouldn't have MiCA, vice versa, actually. What I'm saying is that we have everything at once. We have all the regulation coming from the EBA, the ESMA, and this is a lot to digest for an entity that has come into this market. Basically, I don't want to say anything bad to all you here, but basically IT people. And now you're coming to a compliance framework where you need to adapt. And this is, and I saw when we had the payment services providers, it took them years. It took them 6, 7, 8 years to actually to digest everything that was on their plate. And only then the trust was being started. We got the trust between the supervisory authority and the supervised entity, and between the market participants. So where I'm getting at, it's a lot. So prepare for this and do your best, but we should also expect that there will be a lot of chaos, and we shouldn't leave the market participants hanging there, but we should help each other as well.
Absolutely, yes. And it is key, what you're saying is key, in my view, the role of the supervisory authorities and all the stakeholders, absolutely. Thank you very much for this. My second question would be about what's next. So while the industry prepare for MiCA implementation, what could MiCA 2 cover? I will ask the question to Mrs. Wavidu to have the views of the Commission about what's next, but I would also be interested in hearing Mr. Mecher's opinion about what is needed as a next step. And while I ask this question, I will ask the audience to please share on Slido with me any question you may have, so that if time allows, I will have the occasion to ask these questions for you to the speakers. So please, Mrs. Wavidu, what's next after MiCA? What could MiCA 2 cover if we were to speculate about it, if you just were to think about what could this be covering?
Okay, we already know that MiCA provides for a number of reports to be produced by ESMA and the Commission, as well as an interim and final review clause at some point in the future. So what each of these reports need to cover is provided in detail in the level 1 text of MiCA and is for everyone to see. Picking up some of the most important topics that the Commission will be required to report by the earliest, the end of 2024, is obviously decentralized finance. We are currently reflecting on a potential approach to regulating DeFi. This could be paired with the experience in the different member states. This is an ecosystem that is very fast changing. It's currently limited in size and also very difficult to regulate comprehensively due to its openness, the way it works, its borderless nature. There are clear benefits to acquiring experience in this technology in a safe environment. In MiCA, it was too early to regulate this fast evolving area, especially taking into account the work by other international organizations that is currently underway. So we also wanted to see what the international organizations were thinking about this topic before deciding ourselves. Another topic that is not covered by MiCA but could feature in the future is lending and borrowing of crypto assets. We are internally assessing this issue, but nothing further to report so far. Another interesting topic is the interaction of MiCA with PSD2. As you know, PSD3 and PSR is currently being negotiated. And there are already questions about how MiCA services, for example, the transfer of EMTs, may overlap with payment services. So the market and supervisors may need to clarify on which license the entities need to hold and which activity they should be performing when transferring EMTs for clients. And indeed, PSD2 and PSD3 and PSR may need to interpret or be clarified in a way to allow market participants to use permissionless blockchains in payments, as opposed to non-DLT payment systems that are currently the standard, the mainstream. Another topic would be the NFTs, the treatment of NFTs. Again, we are internally assessing. The co-legislators had decided to leave this out, as it was at the time questionable whether they constituted economic activity. And since MiCA is a financial services piece of legislation, the co-legislators felt that any tokens that may not constitute economic activity should not be part of this framework. Also, there was no indication at the time that money laundering risks were posed by these types of tokens. But we continue to monitor and reflect whether at some point some action will be needed. And the final thing I would like to mention is staking. This is when you lock your crypto assets for a set period of time to help support the operation of a blockchain and confirm transactions. This topic was not explicitly covered by MiCA, but it's starting to look important for the functioning of permissionless blockchains. So we need to examine this issue further and see whether we need to provide clarity around this activity, which will be both beneficial to the investors engaging in this activity and development of staking. So we are reflecting how would be the most appropriate way to our policy to adopt in this field.
Thank you very much. This is extremely interesting. So on the lending and borrowing of crypto assets, I'm just thinking that Consumer Credit Directive 2 was just finalized this year. Could we imagine Consumer Credit Directive number 3 covering also the lending and borrowing of crypto assets?
I mean, lending and borrowing of crypto assets will definitely have to do with, crypto assets run on DLT. And not all the financial services legislation is currently accepting or providing for DLT operations. So we'll have to see whether the right place is indeed the directive you mentioned, or MiCA, or the MiCA 2 framework.
Very interesting. Thank you. Thank you. And I had also a comment on the interaction between MiCA and the PSR and PSD3. I've been working on PSD since 2004, really, so I know it even much better than MiCA, that didn't exist 3 years ago. And I have to say that reading PSR and PSD3, I was searching for a reference to MiCA, which I didn't find. And I was genuinely thinking there would be a reference to crypto assets, and in reality, there is only a reference to EMTs, e-money tokens that are assimilated to funds, but there is no reference to crypto. And so it's interesting what you're saying about the interaction between the two, because I was expecting, for example, to have in the PSR and PSD3 a reference to Article 70 of MiCA, which is talking about crypto being used for payments, and there is like a minimum of liability and consumer protection requirements in Article 70 of MiCA. So is the interaction between MiCA and PSR and PSD3 minimal by choice, or we expect more references to PSR and PSD3 in MiCA 2?
Well, at the time that MiCA was developed, I mean, the definition of funds in MiCA makes reference to the definition of funds in PSD. So at the time, it was felt that this reference would be enough, but it turns out that there are more questions coming up, especially because the technology, this DLT technology, may not be recognized in the PSD framework. So we will need to see whether it will be necessary to make this clearer or see whether something more is needed.
Thank you for saying that. No, I think there are lots of CASPs currently trying to assess how many licenses they need to continue doing what they are already doing. And so some of them are just thinking, okay, we have licenses as a CASP, so we should continue activities as they are. And when they look at activities in payments and activities in other sectors, they're just wondering which is the connection between the different pieces of law. So it's a question I get from clients nearly every day. So that's why I had the opportunity to ask this.
There is a recital in MiCA, if I'm not mistaken, is recital 93, which tries to clarify a little bit that if what you are doing is a payment service, that you need to consider getting a payment service license as well. But maybe it has been pointed out to us as well that this may not be enough. I mean, a recital may not be enough. So we'll see.
Yeah, yeah, recitals. I mean, when we look at then at the what happens on national level, recitals indeed may not be enough. I agree. Thank you very much for the very insightful explanations, Mr. Macker. In the meantime, while we look at what's next in MiCA 2, and we discuss with the Commission these very interesting ideas of what is next, and staking and NFTs and lending and borrowing of crypto. Which are your views on MiCA and what is eventually missing? If anything is missing in MiCA, what would you like to see in MiCA 2? Which is your view as a completely different view, I imagine, as coming from the European Financial Intelligence Unit of Estonia?
Yeah, I mean, I was thinking a lot when I was listening to the Commission speaking, and I think this was so comprehensive, so it would be unwise from my side to add anything here. Let me come to this question from a bit of a different angle. And the angle
Yes.
is that, listen, we just got a new regulation, and we are already thinking of a new one. And this is already a shame in itself, because we should apply the existing one before thinking about the new one. And I remember the same thing when we had the anti-money laundering directive. I think it was the fourth directive which the Parliament, the European Parliament enforced, and then we were already speaking that we need to have the fifth AML directive, which is, to me, it's really difficult to grasp. This week is actually a Financial Action Task Force plenary week, and incidentally, I have access to the live stream as well, and today morning and hopefully afternoon I would be joining in again to see what they are discussing during the plenary. But one of the discussions, and I try to be very brief because I don't know how much I can speak about that. One of the discussions we had was about the vast working group that the FATF has, which regulates the money laundering and terrorism financing risk side. And one of the points that I caught from there was that, and I don't quote me with the number, but I think they said 26% of the entire global countries have regulated VASPs. I mean, this is shame, really, because we need to regulate quickly. We need to have the regulation in all the countries and to have the level playing field. Because if we mitigate or try to mitigate some aspects of the risks in Europe, they would just simply go elsewhere. But at the end of the day, we are the ones that are caught with the materialized risks. For example, if Hamas receives assets through virtual asset service providers that is unregulated in some of the countries, this is not helping anyone. So the angle that I'm bringing in, perhaps we should focus right now more on enforcing the existing regulation, and then start thinking of another regulation. And an example, and I don't want to criticize the Commission in any way. Don't get me. Don't think that. But the same issue is with the AML authority, which we all are expecting. But at one of the conferences, I was asking from the Commission's representative that do we expect that criminals don't launder money until we have the AML authority? No. We need to be here right now, not expecting for the new regulation, but applying the existing one.
Thank you very much for this. I would agree on what you're saying. The issue, though, is very often not about not having enough regulation in Europe, but not having enough regulation outside of Europe. When we look at MiCA, for example, it covers very widely what CASPs in Europe can do and what they can or cannot do, while CASPs which are outside of Europe, who don't even have a license, may be serving, if there is, with this provision about reverse solicitation, with the no reverse solicitation mechanism, they could be serving European consumers from jurisdictions where there is no equivalent regulation. So I would agree with you with the issue of what's happening in the other countries, and this is something that Commission cannot do much about. It's more about for other jurisdictions to take as an example the European Commission and regulate. And in this case, MiCA is certainly setting the scene for what should be done in other jurisdictions. At least it's my view. I wanted to go back on DeFi before starting to ask the questions that are arriving in my chat from the public. I have a last question before moving to the public questions, which would be about DeFi and the challenges in regulating decentralization. Now, this is fascinating for me, even in my job. It's a really philosophical question, how you regulate something which is decentralized. But the question would be, is this really decentralized? And which are your views when looking at this? So which are your views about the challenge of regulating decentralization? Because we understand the next step is DeFi, also because DeFi is growing in size. So which are your views about decentralization and how to regulate something which is not centralized? And it's really decentralized, though, when you look at DeFi with attention. Who wants to start?
Is the question for me?
I would say it's primarily for you, but I would also like to hear the Estonian Financial
And then I can
Intelligence.
take the opposite side again, right?
I mean, I leave you to debate because for me this is fascinating. The type of job I do, for me this is the dream panel. I have the commission and the FIU. I can ask you questions and have reactions. I'm learning more in this half an hour than I've been doing in the last 24 years. So please.
And I can
First of all,
provoke, and I like this as well.
I would like to assure you that just because we are talking about a theoretical MiCA 2, it doesn't mean our first number one priority is not the implementation. Our priority is the implementation of MiCA, the competent authorities applying MiCA. This is our number one job right now. But because this is a fast-moving and rapidly developing industry, we need to be monitoring what's going on out there. So just because we are talking about issues not covered by MiCA doesn't mean we are planning a MiCA 2. We are in no hurry to intervene, but we have to know what is out there and be prepared to share our views whether policy action is needed.
I'm blacklisted
So
now, sorry.
definitely. So on DeFi, okay, indeed, this is a really interesting topic. I could say a few words what the actions we have taken or are planning to take on DeFi. So we are the number one thing we are following is that we are following international work, which is key in establishing a common international principles and understandings of what is applicable to DeFi. First of all, we need to all agree what is DeFi before we start discussing how we or should we regulate. And the international work is very important in DeFi because DeFi services are offered globally, and there is often no clear association to a particular jurisdiction. So this is the really truly cross-border type of service. The second thing we have done in trying to understand how this market works, we have commissioned a study on DeFi. It has been published last October, if I'm not mistaken. This was a study undertaken by an academic expert in the field, and it was very helpful in highlighting some of the differences that exist between DeFi markets and traditional financial markets. In particular, when viewed through the lens of how information is made available and shared between market participants in these two very different market infrastructures, traditional and DeFi. The study also sketched out some possible policy options and interventions on DeFi market. For example, like a voluntary compliance regime aimed at promoting the use of audited protocols. And then the other thing we are doing is the pilot project on embedded supervision. This is done together with the European Parliament, has tasked the Commission to implement a pilot project on embedded supervision. as you may know, some information on transactions on public blockchains is available. So we are building on that. We have already selected a private contractor through a public tender to try and build an application aimed at collecting that public information and analyzing it for supervisory purposes. So the idea would be to understand better whether data on public blockchains can be relied on by the regulators and to what extent, and to ensure some policy objectives such as market integrity, stability, and transparency. We are doing all these things. At the time, we at the Commission do not have a strong policy line in DeFi at this moment, but we are evaluating the different benefits and risks that DeFi presents.
Yes, and I think it's important that regulation is future-proof also. So despite, we all agree that MiCA is the priority now, but for regulation to be future-proof, you have to be watching what's happening in the market, which are the new products. I think it's otherwise, if the regulation is completely inadequate and too old compared to what's happening in the market, then the use of it becomes even less important. No, absolutely. Thank you very much for sharing this. Mr. Macker.
You're smiling already.
I'm smiling because for me this is the dream panel, you know. So I really like the interaction, and I think for the public it also allows them to see how it is to conceive law and how it is then to
Yeah.
be the financial intelligence unit and the roles. So I think it's also very important for the business to see where both of you are coming from. I think it's interesting for the audience to know. That's why I'm smiling, because this is fantastic. But yes, please, Mr. Macker.
Yeah, I made a joke when we were in the ministry. One of the deputy secretary generals was leaving, and he went to the police. And then I was saying that now you were under the roof all the time, listening how the rain was dropping, and now you're going to the rain or between the rain. So it's the same. The police and those that really apply this. What concerns DeFi, again, let me come in with examples that we have seen. So the FIUs, we have around 165 plus FIUs that come together under one roof, which is called Egmont, and they bring together all the FIUs. And during those meetings, we also share typologies, how the bad actors are using products, different products. And we have seen different cases, and this has not happened in Estonia, but in other countries, and they have shown how DeFi has been used for criminal purposes, to steal money or to launder money. But one of the elements that has always been similar is that there has never been a decentralized element in that there is someone always controlling the system. And this is, again, why I am a bit skeptical that I want to really see the real DeFi before we start regulating it. At least examples that we have been seeing is that we are just packaging the same thing in a different way and calling it a different way, but it's still a candy. It doesn't mean if it's a shiny package or not, it's still a candy. So before we start regulating, and this is something that I'm always thinking, we need to know what is the risk, why we need to regulate this, and what is the outcome. Because if we put a lot of burden on the market participants, they will start weighing which regulation to apply, which not. And this is at the end of the day something that we don't want. We want them to have proper amount of compliance people, knowledge how to apply the regulation, because otherwise, if they have too much regulation, too much compliance, at the end of the day, it will be in the prices of the services, and this we don't want. And this is what over-regulation actually brings in. So let's first see and analyze, as my colleague from the panel said. Let's first analyze what are the real use cases, what are the real risks, and then let's try to regulate them.
Thank you very much. It's absolutely insightful. I have a first question from the audience to Mr. Macker. Yes. I'm going to read the question to you. So you said that, so the question is the following. Mr. Macker said that CASPs need to adapt to traditional compliance system. What about supervisors adapting to the technology? Because this should be a two-way street. What would you reply to that?
Of course it is. We need to adapt as well. And this is something that we are looking for as well, the experts that could help us out. The technology is something that that will be tricky for the supervisor authority. Right now, the FIU is not supervising the, let's say, the operational risk or the security risk, but we have seen cases. I'm sorry, CoinsPaid itself was hacked during the summer, and this is something that regulators right now need to see, and something that I have told here in Estonia as well, that in the past we were talking more about money laundering and terrorism financing risks, and now after the war also evasion of sanction risk. But today, because the market is where we have the market, I mean, the economy is on a high, we have high inflation rates, the economies are going down, it means people are burning money as well. At one point, people are going to the service providers wishing to get their assets, and then the real situation will be unveiled to us, because then we will see who has the assets and who doesn't have the assets. And the same is with the security means or systems as well, that it's a really burdening exercise for the supervisors as well, and how to figure out during this process what is all there. And I see that that supervisors would also employ the market participants, and there is no other way how to do this, because you need to have the expertise. Otherwise, you're just going to an on-site inspection or assessing the rules on a desk-based basis, but actually you don't know what you're assessing. You're just having your gut feeling, but you need to know what is going on there actually.
Yes, absolutely. Absolutely. Thank you for that. There is another question which is very interesting, I think, conceptually very interesting to me for both of you, which is the following, always from the public. Given that supervisors see CASPs and crypto as riskier than traditional finances, what would be your advice for them in terms of having the risking strategies? So, what do you think CASPs could do in terms of the risking strategy for supervisors not to see them as too risky compared to traditional finance? Very interesting question. I personally don't have the reply. I'm very happy not to be the regulator here. But which are your views about this? Which could be the risking strategy for CASPs, for regulators and supervisors not to see them as riskier or more risky than traditional finance?
I can start this time. I think what supervisors we want to see is that you have the compliance regime to mitigate the risk. It's not about the risk that you're taking, but the first question is whether you understand the risk and whether you have the compliance personnel to back this risk or mitigate this risk as well. More often than not, we see cases where an entity takes an awful lot of risk, but then you ask how many compliance people you have, what systems do you have in place, how much you invest into compliance, then the answer starts to feel a bit shady or foggy. And this is what gets us anxious. The second thing that I want to stress again, what I said previously, is the trust component. Why the supervisors and the banks, why we are so anxious, why we are so afraid of this risk, is that the risk is materializing all the time in front of our eyes. So in order for us to feel more safe, the market participant itself doesn't need to prove that they are safe or they are acting trustworthy, but they need to tell their partners as well. And I remember when I entered the office, when I became the head of FIU, I went one of the Web3 conferences that was held, I think, a couple of months after me stepping in. I said during that event that look around, and when your partner or your neighbor is doing something shady, go and tap on their shoulders and say that don't do this, because you are ruining my reputation as well. And this is something that the market participants need to understand, that if FTXs happen again, it will ruin their reputations. If they are being hacked again, they are ruining their reputation. If Hamas, Hezbollah, Al-Qaeda, whoever the terrorist organizations are using virtual asset service providers to collect assets and to bomb someone, the case is the same. So we need to look around and build a trust. And the trust is not built within 1 year. The trust is not built with the regulation. The trust is built within decades. And this is how the story went. And we didn't have the same trust with banks as well 100 years ago as we have right now. So this is a very normal cycle of new things coming up and being regulated.
This is very true. I completely agree on this. For example, when you look at e-money institutions, first e-money directive, the trust for e-money institutions when the license was created was not enormous. And on the second e-money directive in 2009, there were still discussions about access for e-money institutions to banks precisely because, and to banking in general, precisely because of the trust issue. I agree with you. It's built over time. Credibility is built over time and complying with regulation. Mrs. Bovidou, any reply on this, the risking strategies for CASPs? Any suggestions?
No, I would agree that the reason we created this piece of legislation, first of one of the reasons was to start building trust on this market, rather than being completely unregulated. This piece of legislation is meant to provide and increase this trust feeling, and the features of this regulation, like any other financial services regulation, are built to provide that. There are rules on the organizational requirements, the minimum organizational requirements that the CASPs need to have. There are rules on the anti-money laundering policies that they should have as a minimum, or the risk for against market abuse. And there are rules for the CASPs, for example, to be transparent on their clients, what services they offer, what products they offer. This when you follow these rules, in essence, you are slowly building trust in the market. Now the crypto assets are indeed considered more risky, but why? Because they were unregulated and nobody knew how they operated very well. So bringing them into the regulatory sphere and making them mainstream is a way to reduce the risk surrounding these new types of products and services.
I completely agree. I would say also that I run the blockchain and virtual currencies working group, which is here in Brussels, a working group of companies working on regulation on crypto. And we were very happy when virtual currencies were included in the scope of the fifth anti-money laundering directive. If it was our choice, we would allow that already in the fourth anti-money laundering directive, because it changed completely the way in which, once you're regulated, the perception changes. And maybe most of the ecosystem was already complying with fourth AMLD because they had to for operational reasons, but they were not in scope. So when they finally were in scope, we were absolutely happy about this. I completely agree with you. Trust is built together with being under regulation. Then the level of regulation and how regulation is written is a separate issue, but without the regulation, there is no trust which can be built. I absolutely agree with both of you on this. I'm just cautious of time. We have another kind of 5 minutes. I would like to ask you, as a last question from me, not from the audience, but from me, the same question I ended the previous panel with, which is the following. I know that MiCA is a complex piece of law, but if you had really to concentrate on one aspect, which would be your advice for the industry? Which is the aspect they really should be looking at? If there is only one, which is the most important industry should be attentive to? I know there is not only one, there are plenty. But if you had to, in 1 minute, say your recommendation to the industry when looking at MiCA, which is your recommendation, what they should be concentrating on, which is the most important for them to do? 1 minute advice for each of you, and then we close the panel.
Apply for an authorization as soon as possible. This is the only advice to give right now to market participants that fall in the scope of MiCA. Apply, if you are an issuer, apply for an authorization for an issuer. If you are a CASP, apply for a CASP authorization as soon as possible. I know the regulation allows current virtual asset service providers to prolong their national arrangements for a number of months. But the idea is comply as soon as possible with MiCA. This should be a
Thank you very
priority
much.
right now.
Yeah, I would concur with you. Mr. Macker.
I would say employ the best experts in all fields of your services. meaning that you cannot do this alone. It's not, again, it's not for IT people. Now it's for compliance people. There are different kind of people that now step in, and you need to have proper employees to get you through there, because the regulation is tough. There are so many pages. The ESAs, the European supervisory authorities, are coming in with their own regulation. Then you will have regulation from your own supervisory authority, and to digest yourself through everything, you need to have proper employees that will help you out.
Thank you very much. I mean, I think the discussion has been enlightening. I would just like to thank you very, very much to honor me with your presence in this panel today. So thank you, Ms. Wovidu. Thank you very much, Mr. MiCAR, and thank you very much for the audience to listening to us. I hope this was insightful and useful for you as it was for me. I've learned a lot. Despite it's 24 years I work on financial services, I've learned a lot in this session. So thank you very much for all of you for this panel.
Thank you. Thank you. Have a nice day.